What's going on, everyone? Dane the Mortgage Guy here, and welcome back to 3-Minute Thursdays. I kind of took a little bit of a hiatus, and I apologize, but I had a ton of other projects that I needed to work on, and I'm only one person, and as much as I would like to be able to clone myself, it's really expensive to do so. So if you know of a cheaper option, then let me know. That'd be great. Anyway, I'm back to making these videos and also my Mortgage Monday videos, and I will make sure to stay on top of my schedule so that I am able to continue making videos for you, answering all the mortgage things in the world in under 3 minutes. So today I want to talk to you guys about conventional loans. Last video we talked about FHA loans, and in other videos we'll talk about USDA VA loans, and we'll talk about conforming and non-conforming, and that's a whole nother video on itself. But today we're going to talk about conventional loans. Now, before we start, you know the drill. I don't remember the drill. I know that the clock goes here, information goes here, and my amazing mortgage company goes right there. Anyway, 3-Minute Thursdays start now. So what is a conventional loan? Well, it's not an FHA loan, it's not a USDA loan, and it's not a VA loan. See, that was easy. 3 minutes, boom, done. I'm kidding. So, conventional loan. It is a loan that is not guaranteed by the government or any government entity of any sort. A conventional loan is a loan that is issued by Fannie or Freddie most of the time. So we talked about Fannie Mae and Freddie Mac. They are issued through those two government enterprises, sponsored enterprises, pardon me, but they are not loans that are guaranteed by the government or a government entity of any sort, meaning you're not gonna have to pay mortgage insurance automatically just for having one of those types of loans, which is awesome. Now, there's a kicker though. If you are over 80% loan to value, which we've talked about already in another video, which I've linked right up here, if you are over 80% loan to value, you will be required to pay a mortgage insurance of some sort. Now, the mortgage insurance though is not provided by Fannie or Freddie or the government entity of any sort. It's actually provided by a third-party vendor. That third-party vendor is gonna look at criteria based on their scenarios or whatever they're doing, and they'll give you a rate, and usually that's my job to find you the best rate out there, but you'll get a rate on what you pay per month to secure and insure your mortgage if you're over 80% loan to value. Now, when you get below 80% loan to value, you no longer have to pay a mortgage insurance of any sort, which is great for those people out there that do have the opportunity and the ability and the means to be able to do 20% down on a home. You'd be able to get no conventional mortgage, and all you would be paying every single month is just your principal, your interest, your taxes, and your insurance. Now, one of the awesome things about conventional loans is that there are first-time homebuyer programs that are specifically for first-time homebuyers that don't require 20% down or 10% down or 5% down. They only require 3% down. But there's specific criteria that you will need to meet, and that criteria is all dependent on where you live. So make sure you message me, make sure you call your mortgage broker person, whoever, we don't care about them, but make sure to call me so that I can give you an idea of whether or not you would qualify for a conventional first-time homebuyer program. Now, don't worry, for all of you guys out there that aren't first-time homebuyers and want to go on a conventional loan when you buy a house, you have the ability to do so. You can go 5% down and you are able to qualify, well, contingent that you qualify on conventional loan terms. God, I really hope I made this under 3 minutes because I blabbed on for a long time in this video. Well, there you have it. Now you know about conventional loans. And I know that there was a very vague generalization of what it is, but that is the core basics of what a conventional loan is in comparison to the other types of loans options out there like FHA, USDA, and VA loans. If you have any questions about conventional loans, put them in the comments down below. Let me know. I'd love your feedback. And if you have any other questions about anything or any ideas or any topics that you would like for me to attempt to teach you in 3 minutes, leave those in the comments as well. If you aren't already doing so, please do follow me on Instagram, Facebook, and YouTube at Dane.the.mortgage.guy. And you can also check me out online at DaneTheMortgageGuy.com, or you can check out the shortened link, dtmg.me. Anyway, everybody, love you all. Cheers. Please stay safe. Please love each other as best as you can. And I will see you guys in the next video. Cheers, everyone.